Hi there, so here we are on Chainlink, which is a digital asset. And so Chainlink is has a very interesting price structure here on the weekly, as you can see. So it formed this really big W pattern, and then it came down and formed this big wide range bar. And so if you had bought down here and you were able to basically take advantage of all this move up, you would have likely put your stop down below these lows here as a protective stop, because it is perceived as an area of support, because this is where price began to move up and made a higher low and then tried to go and make a higher high, but it couldn't, right? So it didn't break the high, forming this big W pattern. Some would actually look at this and say, hey, this was a harmonic pattern. And it likely was. When I looked at this and saw this, because I do have some familiarity with harmonic patterns, and harmonic patterns are simply just these sort of W and M patterns. So if we flip this upside down, it would be an M pattern. So these W and M patterns that have certain Fibonacci ratios between the swings. So we won't go into that. And so what I thought was interesting is once it swept out the pool of liquidity here, excuse me, and began to move up. So, well, here's the exact center of our wide range bar, and I'm marking, you can see I'm marking the open here and then the close down here, and then there's 50%. So you can see once price closed above it, it pulled back below 50% on the next candle, and then price went on to make higher highs in terms of these internal highs. So right now it is moving up somewhere around, you can see if you look, 4,500 is a really big round number. So it'll be interesting. So what I'm looking at, if you look to the right where the price price axis is at there, you can see the 4,500 just right there. That's just sticks out like a sore thumb. That's a big round number that creates a lot of psychology in the marketplace. So anyway, so I just thought this was a good example of this. It's very, very simple to read. Another thing too is that had you bought here, and by the way, this is not advice to buy this asset. It is just simply for entertainment and education purposes only. So you would have noticed the previous resistance here as now acting as support, and it lines up precisely with the equilibrium. So the idea of equilibrium is that in bearish scenarios, prices sold above equilibrium, and in bullish, bought below it. So this was so this is an example of the method. So of course, credit to influences that I've had. RTM found at readthemarket.com and ICT innercircletrader.com. Thanks for watching. Bye.